And I think Friday with the BOJ stuff is an interesting turning point because everyone right now is BOJ is going to raise rates. That's what everyone is saying. I'm of the mind that I think the right question is, what if the BOJ doesn't raise rates? I think that is an extremely strong.
Oh, well, that would be super bullish, I think.
Exactly.
Hey, you need to recognize that the individuals in the podcast to follow are expressing their own views and not necessarily the views of their firms, their affiliates, or associated entities. All of this content is for informational and educational purposes and shouldn't be considered investment, financial, tax, or legal advice. Any mention of securities, digital assets, investment strategies, all of that is for illustrative purposes only. All investments involve risk, including the potential loss of your principal. Past performance is never indicative of future returns, and listeners should do their own due diligence before investing. They should also consult a qualified financial professional.
Hey everyone, Sebastian here.
And Rich.
So we're going to do an odd thing is we're going to have this podcast, last one of our year, where Rich and I are going to kind of bookend it. Zach joins us for a portion of it, but he's the most actively involved member and he has to go do stuff in the middle of it. But that's the way it should be. All right. So with that in mind, let's get back to the normal show. Welcome back, everyone, to this month's version of Alpha Sessions. It's the end of the year, so this is going to be our last Alpha Session this year. We wanted to close it out with some reflections over what the heck has happened in the crypto space. Definitely not what most people expected and what, 2026 might look like. I was on a podcast just yesterday hosting it for Real Vision, and a lot of their institutional investors were bullish for 2026. They, of course, never had in view like a 4-year cycle. And most of them are looking at policy changes that animate them. Stablecoins get the big guys, happy. That's like their discussion. Not the retail crowd interest, but certainly will put on real demand for on-chain stuff. And that does look like it's happening. Tokenization, stablecoins, all of that is a good tailwind. So we have that coming in 2026. But just to kind of start it out, Zach, what are you thinking about as this year wraps up?
Yeah, I mean, I think this has been a really interesting year, to say the least on it. I mean, if I'm looking at some of the recouping, like just end of year type stuff, I mean, obviously things can still sway. It's crypto till the end of year, but this has been the worst crypto market since the 2022 bear, which is such a surprising thing when you think about it.
It has been a bear for I think everything is down basically, except for like a few outliers, but all of the majors and like all of the like mid caps and the small caps are just trash, bottom of the barrel, right?
Everything in crypto has been down.
Yes,
the rest of the market has continued to thrive and move along really well. And I think that is really interesting. I would say with this, if I had to look in terms of where everything is and going, long term, everything is there. It cannot be more bullish fundamentally of what's happening, what's being built, etc. I think it's short term. That's where the question mark is and the concern, because you see some of these incredible headlines come out that don't move the needle or don't do anything. You have whether it's states buying Bitcoin, new legislative developments. I think it was a few days ago, JP Morgan launching a money market fund on Ethereum. Right. All of this stuff, which is incredible developments, but it's not moving any type of the needle. And I think that really just kind of shows, okay, when things aren't moving on really positive headlines, what type of market we're in. In a similar thing, I'll talk into some more short-term stuff. I'm going to hit a little bit of medium-term right now, but short-term stuff, we have like Bank of Japan coming up on Friday. But I think medium-term, to me, it's interesting. Like you had talked about, Sebastian, I see a lot of people that are very bullish for 2026. For me, I'm not sure that is fully my, I would say, base case of what's likely gonna happen. In my opinion, it's much more of a bottom happens in 2026, and we start to see that return to maybe start climbing back up. While there's a lot of great stuff that can potentially happen in 2026, people need to remind themselves that it takes time to move through the system. Like say, for example, all the rising liquidity that's coming through, all the rate cuts that are happening, QE restarting, that took multiple months back in 2019 to actually get into the system.
It did.
And start being felt.
It was mostly H2 stuff back then, right? Yep.
Exactly. Same thing with Fed being replaced, be more rate cuts. That doesn't happen till May. It's still going to have that kind of effect there. I think one other thing I want to point out that I don't think people really are taking account for, the Crypto Clarity Act. That's an extremely bullish and very good thing for the crypto space. People were very optimistic it would get done this year. They officially announced it's not getting done until 2026. I would be very cautious with people looking at it getting done in 2026 and what the timeline is. The reason for that is you come in Q1 after the holidays. That's really the crunch time to get this bill done, because once it gets past that, you start getting closer to midterms, and nobody is going to be pushing or moving this around midterms. Nobody is going to be touching it, wanting to get involved. They're going to be focused on other issues and just winning their re-election. So then the only time you can maybe revisit it again is at the end of 2026, and you get in kind of the same holiday boat. So all these things together, that's why I say long term, it's very, very good. Short term, I think there's a lot of concerns. I don't necessarily 100% see 2026 as a bullish year. But again, it depends on how you define bullish. If you're defining bullish as new all-time highs in 2026, no, I don't think that's the case. Or do we end 2026 positive on the year? I think that really depends on how we end 2025 and how we start January 1. I think for me, though, you see a bottom in 2026, and that max pain starts to kind of get over that. But I'll let you guys kind of take it off from there. I know I threw a lot at it.
Interesting. So yeah, there's a lot of things that I want to unpack there. I want to get your thoughts first, Rich, about like kind of just like top of mind thing. What I'm going to come back to, Zach, is like a number of items about why you're, I guess I would say, short-term pessimistic. But Zach, Rich, where are you? What are you thinking about right now?
Yeah, I mean, overall, like, I understand the sentiment and the complexities and trying to guess what's going to happen in the next 12 months. I think we all know is difficult, right? And, like, there's a reason people talk about crypto in 4-year cycles. There's a lot that happens that breaks, while some patterns might remain in the long term, breaks a lot of the short-term patterns and guesses. And I think ultimately, like, as much as I want to, think about these individual triggers, I think if I take a step back and look at the macro, which I always try to do, this year has changed fundamentally the landscape of crypto. We are no longer a random illegal digital asset that people are buying and selling with fears of potentially, going away. This is now an institutional product that will be traded across the board from all major businesses. And I think, while right now things seem tough, I did just see Bitcoin decide to jump over 90K while we started the podcast, which is just always hilarious to see. Early morning volatility, always great. I do still feel like the outward longer tail look is very bullish. I do think next year will be good. I do think that, all of these companies rolling out their programs, everybody getting involved in the space institutionally, like, I would be very surprised if we start on a lower rung and we don't see some bullish momentum throughout 2026. I cannot imagine a world where these companies are going to want to roll this out as a new shiny product to get everybody invested and to make everybody excited, and then for it to be a complete loser the first year it launches, right? Like I just don't see a world where that's possible. Now, I will also pair that with my pessimism on the economy as a whole, and the situation we're in with AI. People want to tout the stock market is doing well in some cases, but to me, it's all a little bit of a facade that we're just trying to like get this one thing over the finish line and hope it lifts all boats. Okay. Long and short to say, it's going to be a bumpy ride. And if anybody tells you otherwise, they're being silly. And I think it's just going to be really important to pay close attention. And to wrap it all up, even if the economy does worse and things struggle, that just means more intervention. It means more attempts to turn the economy around to stop things from bleeding. And it only takes one small narrative to get the market turning in the right direction for crypto. We've seen it time and time again. And that's kind of my general outlook for next year.
Okay,
I just
so
want to add
yeah.
one comment to that on it, because this is where I agree with a lot of Rich is saying, even though I think 2026 is a bottom year. That doesn't mean it's necessarily horrible. It's the bottom is not. I don't think it's going to be as bad as it was in the past. But Rich, to your point, where you're saying these banks are committing it, these large institutions are committing it. They don't want their first full year to be bad. I think another thing that a lot of people caught with now is a lot of people thought the same thing for the Trump presidency of crypto and for the ETFs of crypto as well. This, I think, depending on where it's at right now, where we're talking at this point, once again, things can change towards the end of the year. Crypto moves really fast. I always forget when these come out, so sometimes the things I say sound dumb. Right now, it's all down pretty substantially in first year trading for the year. So I think that's one of those. I agree, and I share everyone's thoughts on this call. It's extremely bullish long term. It's just more of what's the volatility that's going to happen in between. I think 2026 bottom. Short term, honestly, when I define short term, I mean from now until the end of the year. I think is still really interesting. I can dive into that a little bit later, but I think there's a lot of interesting stuff going on with Bitcoin. And like it's all, or I can just kind of go into it now. I'll share my screen a little bit here.
I did want to pull on one point that I think is really important for the audience. We did not have a blow off top. So I don't think an 80% decline is implied. The only reason we got a blow off top, or like those big declines before, is because we had that. And I've often stressed that the QQQ is more, in the .com era, the NASDAQ 100 was more developed than cryptos are now, and it declined 83%. But it declined 83% after the .com bubble. Right. And so when you have a relatively established market, if it doesn't go up a whole lot, it just doesn't have room to come down a whole lot. And so, we're down roughly 30%, like Bitcoin is from its all-time high. You'd expect maybe 20% more, right? As the bottom for like a 50% total decline. So just to kind of frame for the audience what the downside looks like. Potentially, probably 20% more. I do not see an 80% decline without mania at the end. It's difficult for me to imagine it. It could happen. This is crypto. Zero is always on the menu. That's the house special here, right? So I don't want to like bullshit people about that. But on the other hand, it's just difficult to imagine how these big declines work. Like, it's kind of helpful for the audience. We sort of have three different views. Zach, the trader, Rich, the fundamental analyst, and me, I trade bubbles though, but like long-term bubbles. That's really my specialty, is like 18-month bubbles. And so when I look at the volatility dynamics of this, it simply doesn't have the capacity for huge drawdowns because we didn't get a blow off top. I think we know what the bottom of ETH looks like because we saw that already, right? And a lot of alts have bled out. I'm not going to speak to a lot of those coins. Like some of those projects are just not coming back. They're just not. But out of the majors, if we stick to the space is going to consolidate, and everyone knows that. But it's just hard to be like deeply pessimistic about like, oh, it's going to be a huge decline, because I don't also think it's the time like, oh, okay, it's time to put my short position on and I hope that I ride it all the way. I think that is especially tricky in this environment.
I agree wholeheartedly with that. And I think I always like to look at the past a little bit, because history never repeats itself, but it often rhymes. I think if you wanted to look at like a fractal that looks somewhat fairly similar to what is potentially happening going on right now, you look at 2019. You look at how, because there's a lot of things that kind of line up at the same time. QE restarting, then how Bitcoin reacts with all of that, etc. And then if you just remove the pandemic and that drastic black swan event, you can kind of get an idea of you seeing that, okay, that's kind of something that you see a top that's not with euphoria. It's more just kind of a top where it's like, it's kind of this feeling of whatever.
Right.
And to counter jump on that, like I completely agree with history rhyming and looking at these patterns. And look, we all know there are some massive crypto whales sitting at the top of this, having fun, selling their positions, and finally being able to take profit after years of waiting. I just think the landscape has gotten so much more advanced since then. And like, even just talking about what Sebastian's saying with the drawdowns, right? Like, yes, fundamentally, a lot of good things happened for crypto this year. But also, the world was pretty crazy. And the fact we didn't drop lower, considering everything was going on, we bombed multiple countries. There's threats of war. We had the two, power couple of the United States mass extract hundreds of millions of dollars from the crypto space. We basically allowed all white collar crime in crypto to go off like nuts this year. So like, yes, there was definitely a lot of progress, but I would also argue that given everything that happened, I'm kind of surprised we didn't go lower already, right? So like, to me, that is showing there is some strength. We are building that base, and the longer we chop sideways, crypto sideways, the better potential we have for a run up next year. So I'm trying to pair, everything within that lens. Like, there's been a lot of good, there's been a lot of bad, and ultimately we're still sitting at 90K. I make the joke Thanksgiving over Thanksgiving, right? Like a year ago, it was like, oh my God, 90, 100, this is crazy, whatever. Even 80s, I can't remember exactly where we were. This year, pretty much the same, and now people are very pessimistic and panicking, but it's like in the grand scheme of things, we're doing good. We're holding on. Things are moving in the right direction.
Yeah. And Zach, I want to move to unpacking your screens. One comment. Criming. I have wondered if crypto crime declines have actually weighed on asset prices. And speculation I've had, and this is pure speculation because I have no real basis for this. Russia used to be pretty involved in the crypto space. Since the invasion of Ukraine, which sort of coincides with the 2022 decline and nothing really coming back in the alt space afterwards, since that period of time, Russia has been sanctioned everywhere. Also, Binance was sanctioned, and the ability to offload potentially a bunch of cash through the space into dumb stuff, certain NFT projects or whatever else, seems to have diminished. At least that avenue for cash flow through the space may have been a significant portion of some of the mania that we've seen, and that faucet has been turned off. I don't know if the end of the war in Ukraine signals, the faucet is back on, let's start criming again, because clearly some of that stuff is happening. Maybe it'll happen again. CZ got pardoned, right? So maybe that spigot turns back on. I don't know if it was a meaningful contributor to begin with. I'm not much of a conspiracy theorist, but it is possible.
That's more in my department.
Yeah, it's possible. And I just want to point it out that the criming thing is kind of back on the books for 2026, I think, assuming, Ukraine sort of settles out and then Russia, like sanctions on Russia kind of go away, which people do want for like global oil supply chains and that sort of stuff. It works better if Russia is part of the global system rather than not, like frankly.
We got Venezuela now. It's fine. Whatever fine. With Russia.
Yeah. All right, Zach. So we've delayed your graphs. Let's get them on the screen.
Yeah. So it actually segues really well to what Rich was kind of saying with it. Let me share really quickly. Just going kind of live to this right now, and to what Rich is saying about this consolidation, and I'm saying near term. I don't honestly ever really like to look unless I want to see anything. I think people do way too short of time horizons. Anything shorter than a daily time horizon. I think that's where you want to really kind of live and breathe, because crypto is so illiquid, it can be pushed around. Ever since, and I want to point out two things here. This is just overall price graph, ignore all the SMAs and stuff I have around here. You start looking since about November 20th, 22nd here. Just this section right here. You are seeing this continuation up that's still structurally pretty sound. It has continued to be higher lows. It's not lower highs. It's not lower lows. It continues to kind of build up. And then this is where things start to get even more interesting for me. I look at on balance volume. I start showing where's the volume of this move happening. Same section here. You can kind of start to see, okay, all the down moves, they're not like the up moves. You can look at here if you just want an even simpler one, but it just kind of starts to show, okay, it feels really painful right now, but things are not horrible. Things are still constructive. It's very range bound, but it's still kind of moving up in the right direction. Now, this is kind of, you're on a nice edge though, because it could either pop off the upside or to the downside. And I think either way, I wanted to show this to show people that like this time right now is not this horrible, detrimental, painful time.
Right.
And I will also say, I know I'm kind of pessimistic for 2026, just in more sense I'm not saying there's gonna be an all-time high in 2026, or that there's probably that's where the bottom happens. But I want to talk short term too. Short term, going into the end of the year, I still think that this is where I get out there, and when this comes out, and I can look like an idiot for saying this, I still think there is a good chance for things to be bullish. And one of the reasons I'm saying is that because of this range, it's been so constructive and it's sticking around, markets start to get illiquid around the holidays. And I think Friday with the BOJ stuff is an interesting turning point, because everyone right now is BOJ is going to raise rates. That's what everyone is saying. That is consensus across the board. That is basically been the known base case for everyone. I'm of the mind that I think the right question is, what if the BOJ doesn't raise rates? I think that is an extremely strong.
Oh, well, that would be super bullish, I think.
Exactly. And I think that is potentially something that sends it up. Now, here's the reason. I'm not saying this out of pure, maybe a little bit, but I'm not trying not to say what happens if the BOJ doesn't. I think that it's not pure hopium. I think there is real reason for it, because people got to keep in mind, right? When you look at the Fed, Jerome Powell, he does not make a decision that goes against the grain of what the majority of markets think. So whether you're looking at prediction markets or you're looking at the Fed Watch or whatever, he does not go against the grain of that. Whatever the majority of that is going to say is going to happen.
That's where it lands, for sure.
Exactly. BOJ is not like that. BOJ is small. It doesn't really have the tools to be a predictive thing. Like, there's no Fed Watch, there's no anything like that. It's just maybe people taking surveys and some economists. So they're not really beholden to that. I mean, until prediction markets came around, there was never really too much of a clear thing. You would just have to look at bond market prices and see what was going to happen.
Right.
There's no clear expectation type thing going into this. With that being said, if they raise rates, this would be the first time in, I think, 30 plus years that the BOJ would have raised rates while the Fed cut rates at the same time. The question
could happen.
It could happen, but it's such an outlier of time. And I would say this as well. What does it benefit to raise by 25 basis points for the BOJ to do it now instead of later? The reason I'm saying this, you're going to do this before the Christmas holidays. They just started to get on relatively decent terms with the Trump administration and cross trade or anything like that. Why are you going to want to do this and potentially risk this whole, even though it's only 25 basis points, it shouldn't really create this whole unwind of the carry trade, but this whole scare. At the end of the day, I think the BOJ, it's not so much, they realize the role is, yes, they need to take care of the Japanese people and what's going on there, but it's also we cannot create a global scare and market scare. That's probably their biggest concern.
Yeah, and they also don't want, I mean, so what it does is it strengthens the yen, right? I mean, there's a whole lot about the carry trade that really matters, right? Because it'll strengthen the yen, and then that actually, makes purchasing power more difficult, because Japan imports everything, like really, they do. And so that makes purchasing power a problem for the Japanese people. I think structurally, long term, right, it's deflationary. Their population is going to collapse, right? And so it always struck me as a weird thing. You have to stimulate into a population collapse because you have a population collapse. Right? About that one, the BOJ thing, because I think that's maybe the most important catalyst over the next 7 days. Is my view is fairly straightforward. Probably will happen, and I'm just waiting to see. I think it's a good outcome if they raise rates and then they signal more or less that's it, we're fucking done. Because if they signal like, oh, there's more to come, then I think we see like that's when we might see real cascades in the crypto space. They come out, they say like, we're raising and we need more of this shit. Then I think it's bad news. Don't be in perps, people. Like, don't. And I'm saying that to the degen gamblers who are left out there. By the way, There's so many freaking. I look at the 25 Delta skews on Bitcoin, and there are a shitload, like perma degens there. Just so many degens. They're betting that Bitcoin's going to come back, and until those people are like washed out, I don't see a full
professional degens now too. It's not just the retail traders.
I don't see the bounce back. So to go to your point, Zach, I agree. Like, rate cut doesn't happen, super bullish. Or rate hike doesn't happen, super bullish. Rate hike does happen, but it's more or less the end. Fine. I think we're long term cleared. Like that overhang goes away. Rate hike happens, and more to come. Ugh. But I think that I would say that's the least likely one for me. It could happen. All things could happen.
I agree with that too, and I that's a part of it, that they hike rates. How much is it priced in? They want to be like kind of dovish with it, etc. I just go back to this, and I'm trying to think. And granted, if you look at it, it is statistically the outlier scenario. If you just look at the consensus opinion, what happens if they don't? Because I'm trying to understand, and I think about it. Why now? Why do this now instead of waiting until or doing it in early 2025? They do have this concern about the impact this has on the global markets. Why do this over such an illiquid time, right at the end of the year?
No, that's a good point.
Is it that much of an emergency?
I don't think it is. So, okay, here, let me put, since we're sharing a couple of charts, and let's see here, presentation. Let me pull one up for you all. This is the thing that I've been looking at. Can you guys see this one here? Yep. Super wonky, right? Which is corporate bonds minus the Fed funds rate. And what you're noticing are, by the way, the red line is more or less useless. Like the 200-day moving average on corporate spreads is like a useless metric. So just ignore the red line here. What you're looking at are these stepwise like moves. And, this has all happened post worries about Oracle being able to pay back its debt burdens, right? So the credit default swaps on Oracle have just shot up. And in general, what is happening is that you're seeing corporate bond spreads increase. So that stuff happens, like deterioration of the credit market, but it's not the credit market generally. I want to point out two things. One of them is here. This is high yield, junk bonds. You'll notice junk bonds are not going up. So why the hell are, excuse me, I'll find it. There it is. Why the hell are corporate bond spreads blowing out while junk bonds are sitting here? Like, it's like high rollers getting bounced out of a club, and like the riffraff gets in through like the velvet line, like ropes. It is just an inverted world. Why would that happen? And just look at this. So XLF is going up. It's fine. Financial subsector of the S&P 500. So there's no general worry about credit risk, right? If you look at consumer discretionary, like I was readjusting this morning. Like we're almost at 10% decline to the SMA 200, which is pretty toppy for consumer discretionary as a note. But if you look over here, this is semiconductors. Like this has been coming down. And I think this tells you it's the story. It's basically the worry here is AI mega caps are debt leveraged, and there's concern that they can't pay that back. I do think this matters for crypto, because if the mega caps sort of go under, I do think that is the scenario in which you do see Bitcoin like reprice down into the teens. Like that could happen. And that's why I've been worrying about this sort of sector. Now, in order for this whole thing to resolve, we have a bet. And it has to be something along the lines that, notice like NVIDIA is just like sliding down, right? It has to be something along the lines that this will not implode. And in order for this whole thing to not implode, we need something very specific to happen. And I can show you that in another window. I've been working on a model because I feel like, sort of my job as a quant is to like model things out. I don't have like a number, like unless I have something like this, it looks weird to me. So what we really have is something like AI uses. Right now, AI is cool. People use it to like write better emails, but that is not producing productivity gains. And I've sort of got little blue lines here indicating, accuracy rates or reliability rates. So one of the problems is that AI is not that useful for most industry grade stuff. You still have to include a human in the loop. That means you can't automate it away. And unless you can automate a lot of labor, then the NVIDIA bet and a lot of the AI bet goes south. It starts unwinding. Like, unless we're able to replace by 2030, 80% of the working force, I think I don't really want to be holding Oracle. How about that? I don't want to be long Oracle when that unwinds. And so, in order for that to happen, we need AI to produce more reliable stuff. And the error rates are simply too much. I don't know, Rich, you were in marketing before this. I tend to think that, if you have an autonomous agent that tweets out that, I don't know, Cheerios are now made of meat, it's not great, but your firm will survive, right? You don't really want to deal with that blowback, but it's okay. If you're in a financially compliant sector and you report the wrong numbers to the SEC,
Exactly.
you're screwed, right? And if you're in a hospital setting, you end up with dead people. So the error rates really matter, or the reliability rates really matter. And that's kind of what these blue lines are indicating, is this AI sufficiency frontiers. What we'll see is that when we get to like 99% accuracy, you'll probably see a lot of adoption. And then, like 99.9, you'll see some more adoption. And then finally, 99.99, you'll get more adoption, etc. And it'll be very stepwise for these adoption rates. And I don't know if we're going to make it over many of these barriers. Maybe we make it over that first barrier soon, before 2030. I don't know. Do we need a world model that's accurate enough for this sort of thing? I don't know. I think, but that's meaningfully where we are. Oh, by the way, this is also the unemployment rate for the future. Like inversely, hey, once we hit this much accuracy, a whole shitload of people lose jobs. That's what happens at that point.
Which they think is right around the corner. I
Right.
mean, that's the predictions now.
That is the bet, is that it's around the corner. I don't know if it is, and that's kind of the concern. So it's a real double-edged sword in a certain way. Like AI doesn't implode, great, but we get huge unemployment. AI does implode, but people are kind of employed, but we live through a recession. I think, so that is what is implied by, I think, the blowing out of the corporate bond spreads. And we'll just have to, that's a thing worth monitoring. It's not going to implode by the end of the year. It's not going to be in Zach's wheelhouse at all. But it is like in the fundamental wheelhouse, and it's just something to be aware of.
Yeah, I think the AI conversation is very interesting. Running e-commerce businesses, I've watched it be adopted pretty quickly over the past year. There was a lot of pushback immediately when it first came out, saying people aren't going to accept this. This is going to break all of the norms. Pretty similar to when social media first came out not too long ago. And now, if you're scrolling through YouTube and you're getting hit with ads, I would wager 90% of them are now fully AI. Most people can't tell. But anything where it's just a solo person script talking to the camera, it's 100% AI content. Advertising on Facebook, all similar. I know we were talking before this call too. I think the one part that's really getting companies stuck right now is every company is automating their platform management services, whether it be Amazon, Facebook, anybody in between, all with AI. So one of the biggest catch-ups right now is, people trying to talk to the AI server and it not understanding properly. So companies just get completely stuck. And to your point, right? Like that's part of the adoption curve. I think the scary thing is anybody in the space right now that's big thinks we're closer than people are pitching for that to happen. I know they're vested interest in that, so that's probably why they're saying it. But the fact that it's a possibility that next year we could break some of those barriers you're mentioning and really have the adoption they're talking about, it's something to be aware of. Yeah. It's really going to change the landscape of everything.
Yeah, and that goes to like my point about how I think AI is macro now. I don't think that you can do macro analysis without doing an intelligent sort of review of what AI is. It will have such an overwhelming impact that, AI advances matter as much as bond spreads or unemployment rates or anything else.
I mean, there's a real reason that the media machine right now is all focused on changing the narrative around data centers, right? Like everywhere you look, whether it's Fox or CNN, both sides are saying, all right, guys, we all have to put on our big boy pants and accept that this is the direction we're moving, and you all have to absorb the cost for electricity bills, and be a team player, because if we don't get AI to where it needs to be, the country falls behind. There's a lot of nuance to that conversation, but I find it very interesting that on a both-sided front, they're pushing it. I saw, and this is just a funny one for us to laugh for a second, Fox News yesterday was talking about how we need to get rid of Christmas tree farms. People should start buying artificial Christmas trees so we can make room for data centers. I just thought that was hilarious. I thought there was a war on Christmas. So I was like, okay,
wow.
Wow. But that shows the importance. So yes, it is a macro conversation. You can't remove AI from it anymore. And we've talked about this before. If you remove AI from the equation today, we're deep in a recession, right? So this is the new future, and everybody's kind of got to get on board and start understanding that.
Yeah, I mean, that's where all the CapEx is, et cetera. But it does, debt burdens, I don't know. The other thing is that, okay, well, we don't get there fast enough. And then all of these firms start potentially going under. And I think the idea is, I guess the U.S. government is the lender of last resort here. So
Sam thinks. He said basically verbatim on an interview, he said, I'm not expecting them to bail me out, but
yeah.
It's
they employ more people than Detroit automakers did, right? So if the automakers get a bailout, I think AI gets a bailout. And so the real implication there is not Oracle just goes under or something like that. Well, maybe, I don't know. But they won't let the major ones go under, right? Certainly some asset pricing compression, but the real implication is the long-term debasement trade, right? Because then that just adds to the U.S. debt burden in a meaningful way, which is going to come out in one form or another as lower value for the U.S. dollar. They're not going to let U.S. bond yields shoot up through the roof and ruin the economy.
Correct.
So they're going to do some form of yield curve control, which is what Japan has been doing for decades, right? They're going to do some form of yield curve control, and they won't call it that. They'll call it something fancy and economically boring, but that's what it'll be. And then the net result is that the U.S. dollar relative to the basket of world reserve currencies goes down. It probably goes down substantially relative to gold. And historically, when other countries have experienced similar situations, Bitcoin has been a source of refuge for those. So, longer term, that's the debasement trade. And I think that AI debt bubble translates into more debasement trade. Because I don't see AI agents, frankly, the AI agents that we need, that 1% error rate, I don't see this happening in 2026.
No, there's too many cooks in the kitchen. No. Even if you get one that's right, it's going to be a lot of noise for that to break out, because the difference in that variation is so small right now.
Yeah, I mean, there's Jan LeCun's thesis for the audience. He won the Turing Award for giving us LLM transformers as we have them right now. So he quit Meta because he's convinced that transformer technology, which is behind all of the chatbots, is never going to give us a world model. They'll never model causation in a way that will make LLM agents active in the way that people want them to be active. So he's just rebuilding world models, which is a totally different research task. Now, if he's right, everything here is just wasted money. All of it is wasted money. I hope he's not. I hope we need something short of world models is still going to be actionable, and I think it will be in various sectors. The question is how actionable in which sectors, and honestly, I don't see AI agents taking over medicine or a lot of high compliance sectors anytime soon.
No,
I just don't see it.
Right now, it's to be expected in America, but a glorified shopping assistant, right? That is the number one use case right now, whether that be for customer service or even some supply chain management, marketing. That's the majority of use cases right now. Yeah. I don't, despite announcements from the military and everybody else, I don't see it being critical infrastructure at this point to actually manage anything without another pair of eyes on it. And it's going to be that way for a while. I mean, the number one, I think we had talked about this before, but you can tell they're starting to flounder because the products they're focused on pushing are direct advertising and ChatGPT for checkout. And, I hate to mention it, but custom adult content for individual users. That is a big bucket of revenue they're focused on now, right. Which tells me you're a little far away from advanced artificial intelligence that's going to run the planet if we are now focused on, degenerate behavior.
Yeah, and so, and I had a discussion with, because we have an AI accelerator, and so I had a discussion with the CTO of the team, and his view, Andre Damien, PhD in computer science and math, so too. So his view was that we need to move away from the AGI claim, because we don't actually need AGI to have useful agents. Like, we don't need, so the focus on smart LLMs is misplaced. And that's because our world doesn't run on everyone having a 130 IQ. Our world runs on people having average IQs. And it runs very well on that. We don't need, they're already at the intelligence frontier. We don't need more of that to get useful agents. We need agents that understand context in a way that these don't. That's why people with ordinary intelligence can point out blindingly obvious problems with these AIs. Some of them are making breakthroughs in math and new fields. I saw that one of them got a 10 out of 12 on the Putnam score exam, which is ridiculously good. But we don't need AI doing that stuff to make sure that our shipping fulfillment happens on time and goes to the right person.
100%.
Or that, a video on YouTube isn't labeled political content because it happens to mention certain political figures, right? Mm-hmm. It doesn't mean it's an ad for them, but AI can't tell the difference at this point. So that's sort of where we stand. And so what we probably need is something like general purpose intelligence, GPI. And we should stop talking about AGI because that's fine, it's a thing, but who gives a shit? It doesn't even matter.
Yeah. I mean, right now it's just math. That's all that's happening. There is no intelligence. There's no critical thinking. It's just a big math equation that we grew in a basket and don't even know how it truly works, right? We're so far off from AGI at this point. Mm-hmm. I'm sure we'll get there, but to me, there's just so many little steps that come in between.
Yeah. All right. So let's wrap this one up. What are your final thoughts going into 2026?
Yeah, going to 2026, I feel good. I could see some short-term pain. I could see some sharp drawdowns during the year, depending on how the economy shakes out for some of the majors, like you mentioned. But I feel that after the past year, we are further along than we've ever been. The market has matured more than ever before. The players who are entering the space are serious, despite some more bad actors still existing. I don't know if you saw the expose on some of the Solana founders that came out yesterday, and the
I read a title, but I didn't see much of that.
Just typical gambling degeneracy. We'll save that for another day. I think things like that will still happen. There'll still be bad actors that pull down the space, but I think ultimately, if you're looking at Bitcoin and Ethereum, you're looking at stable coins, you're looking at adoption, I've never felt so good. So I think just stay away from leverage, batten down the hatch, and hang in there, because it's going to be an exciting time no matter where we end up. But I know fundamentally we've never been stronger.
Yeah, no, I tend to agree that Rich is the trader's view, and he tends to be right in a lot of these short-term calls, is what I found. And so if he's worried over the next 6 weeks, then maybe it's time to be worried over the next 6 weeks. Rich, you and I kind of have different views on things. You're the fundamental analyst. I trade bubbles, but the other thing that we do is delta neutral. So I just kind of sit here and let algo barb stuff out. So I don't really know what the hell we're doing, right? And I don't care. But my sense is that, realistically, the thing that matters when I drill down into some of the liquidity stuff is that it's central bank liquidity that matters, not just global. M2 stuff isn't really the thing that matters for at least the altcoins, which is what people are looking for. And central bank liquidity sort of building will happen only when the Bank of Japan stops their stupid hike cycle. But we have reason to expect that is happening. And that makes me sort of optimistic that the United States' new rate cut cycle, which will be implied, they're going to do something, right? They're going to do something to try to bring down the middle of the yield curve, because it's an election year. It's an election year. They're going to throw everything they have at this. I don't know if
they're desperate for it,
but they're going to try to do it. They're going to cut interest rates, which is only going to stop the short end of the curve, right? They're trying to bring down the 10-year yield. They'll try other stuff. They will. Yeah. And I think that this will give us more liquidity impulse that we need. And without a big suck that we've seen with Bank of Japan, that could be quite supportive of a large increase in 2026. Maybe not. I'm not that guy, but I can say that there are some positive tailwinds here. So to wrap this up, to everyone out there, 2025, what a year.
It's only going to get more fun from here.
Yeah, absolutely. All right, signing off.